on the play. Flag on the play. So we're talking about financial accounting, and it's important to understand that when it comes to financial accounting, there are rules known as Generally Accepted Accounting Principles, GAAP, a very important acronym, which is set up by FASB, FASB, Financial Accounting Standards Board. So please make sure you understand that in financial accounting, there are rules that must be followed. So in various topics, when we go through the balance sheet, the income statement, statement of cash flow, statement of owner's equity, all these different statements, there's different rules that must be followed. And there are different methods that must be used. For example, in accounts receivable, under GAAP, you must follow the allowance method. There's another method known as the direct write-off method, which you cannot use. More on that later, but that's an example of where there's multiple methods, and you must follow the method that is used under GAAP if you're required to follow GAAP. Now, some of you might be wondering, well, when are you not required to follow GAAP, and when are you? If you are a publicly traded company, you're required to follow GAAP under the SEC. You have to be audited for various reasons, and the idea there under SEC is that you must fall in line with GAAP. That's one of the important elements. So think of these rules kind of like laws. You have to follow these respective items. I'm a referee, so think of me like FASB. I put the flag on the play, right? Your favorite sport might be football, right? You might like basketball. In basketball, you got referees in basketball. Think about financial accounting. We've got a rule standards board, financial accounting standards board, and then we've got the GAAP that they promulgate, the rules that come from them. So keep that in mind when you're going through all of accounting. Financial accounting has rules that are set. Now also managerial accounting, which we'll talk about in another video, managerial accounting is like the old west, old wild, wild west. There's no rules that fall into play there. And the main reason why financial accounting has rules that must be followed is because financial accounting, we're reporting to external users. Managerial accounting, internal users. So external users are those outside the company. You're talking about potential stockholders or stakeholders or people, again, outside, suppliers, all these different people. Someone making a loan to the company. These are people outside of the company, not internal, external. Managerial is only internal. So you're talking about managers or employees within the business to make better decisions. So that's why it's so important to have these rules. The idea is that accounting is there to identify, record, and communicate information that's relevant, reliable, and comparable. So when you're comparing two businesses, the rules should be apples to apples, not apples to oranges. Or I should say basketball to basketball and not basketball to football, right? Can't mix the sports up. We like both sports, but can't mix them up. So the idea is that you have to be comparing basketball to basketball, not basketball to football. So keep that in mind. That's what GAAP and FASB is all about.